Sale of intragroup inventories and adjustment of unrealized profits. So this is another intercompany transaction between the parent and the subsidiary. So in this case, we can see that parent may have sold goods to subsidiary, or subsidiary may sold goods to parent. So when they sell at a selling price, okay, so you remember cost plus profit, you have selling price. So the profit here, when we talk about this entity, this business, in a business combination, preparing the consolidated statement, when parents sold to S or S sold to P, basically the profit is still within the group. Alright, so this profit is what we call as the unrealized profit. Okay, because when we combine the financial statement of the parent and the subsidiary, so the profit is still there. It's not like a sale to third party whereby the profit is realized immediately. Okay, because for intercompany transaction, when parent sold goods to S or S sold goods to parent, all right, so the goods is still within the group. The goods is still within the group. That's why the profit is also what we call as unrealized profit, or URP as a short form. Okay, let's look at the example for this intergroup transaction. H controlling interest 75% of S, so H control 75% of S for the year ended 31st December 2020. H sold inventory to S costing 40,000 for 50,000. So you can see that the selling price here is 50, cost is 40,000, profit is 10,000. S had sold 75% of these inventories, and the remaining is closing inventories of S at 12,500. Because if you look at 50,000 times the balance that is have not yet been sold, 25%, so you got that 12,500. 50,000 being the price sold to S. From the point of view of H, the inventory will be recorded at cost. However, from the point of view of S, since the amount purchased is at the selling price 50,000, that's why they record their inventory at this 12,500. The remaining 25% that not being sold. H would have a profit. So let's look at the explanation here. H would have a profit of 10,000 from the sale of the inventories to S from the company level H. And from the point of view of H would have 10,000 profit. However, from the point of view of group, there is still unsold inventories. Only 75% of the profit is realized as it has already been sold by S. Therefore, there will be unrealized profit on the unsold inventory. The URP is recorded by the seller. As I told you just now, as when H sell goods to S, the good is still there. The unsold goods is still within the group point of view. So that's why the 25% is what we call as unrealized profit. So 25% from 10,000, so you have that 2,500. You have to adjust the retained profit of H, right, because H is the seller, so and then credit and the inventory. This is the adjustment if H is the seller. What about if S is the seller? So the journal entry will be debit retained profit of S. So you can refer to this later in the statement. All right. So the URP is calculated based on two methods. So the profit, the unrealized profit, either markup or margin. So please make sure you read through the question whether the markup and the profit is actually calculated on markup, which is on cost. Cost is 100%. For example, here 25% profit means 25% over 125. Markup cost is 100%. So remember, cost plus profit equal to selling price. If markup means cost is 100%, if the profit is 25, means selling price is 125%. For margin, means selling price is 100%. So if the profit is 25%, therefore cost is 75%. Alright, now let's look at example here. The statement of financial position is given as at 31st December 2021. On 1st January 2021, H acquired 120,000 of the 180,000 issued ordinary shares of S when the retained profit of S had a credit balance of 12,000. So this is on the date of acquisition. You can see that H acquired 120 of 180,000. So basically two-thirds, 2 out of 3, the controlling interest. During the year ended 31st December, H sold inventories costing 40,000 to S. H invoiced the good at cost plus 25% markup. Meanwhile, 10,000, the invoice price of this good still remain in the closing inventory of S. First, required, and look at the requirement, calculate the unrealized profit, analysis of the financial statement, preparing the schedule, and the third one, prepare the consolidated statement. So what are we going to do? So let's look at the step here. Alright, so first identify the seller or the buyer. So here you can see that during the and the H sold inventory. So H is the seller, S is the buyer. Second one, calculate the URP based on the method used. So here you can see cost plus 25% is what we call as markup, means cost is 100%. And then also the third one, prepare the schedule and the consolidated statement of financial position. So let's look at the calculation here. So H is the seller. Cost plus 25%, which is markup. Cost is 100%. Profit 25%. So invoice is 135%. So you can use this calculation. Cost plus profit equals to the sales or invoice price. 125, 125%. So what you know is the sales price. The amount that is unsold, 10,000 remains. Okay, so 10,000 remains. So that's why. So you have this 10,000. Alright, so you can use the mathematical equation for this, for the calculation of the URP, 25 over 125 times the 10,000 and the balance of that URP. Okay, so unsold inventory, so you have the URP of 2,000. Okay, so since H is the seller, so you can refer to this journal entry for the adjustment. Okay, remember just now the controlling interest, two-thirds, okay, 120 out of 180,000, two-thirds or 66.67%. NCI therefore is one-third of the total interest in S. Okay, so preparing the schedules, preparing the calculation of the goodwill first, this part. So you will have the consideration transferred 128,000 from the question investment in S. So you can see 128,000, and then the fair value of the net asset from the question given. So you can see that the retained profit on the date of acquisition here, add on with the ordinary shares of S, so 192,000. And then you calculate here, transfer, calculate what is the portion of the NCI. One-third of 192, so you have 64, so the total of the consideration transferred will be 192,000 plus the NCI. Compare with the goodwill and compare with the fair value of the asset, so you do not have goodwill or bargain purchase equal. Alright, so it's 0. And then the schedule, continue with the schedule. So retained profit of S is 78,000 from the question here. And then minus with the pre-acquisition profit 12, so you got 66,000. And then of course you will portion according to the controlling interest of the group and also the NCI. And then the retained profit of H, everything will goes to the group. However, since H is the seller, so you have to adjust the URP from the retained profit of H. Remember the journal entry just now, if H is the seller, so you have to debit the retained profit, you adjust for that, and also the inventory later on. Okay, so retained profit, that's why you adjust here, retained profit minus with the 2,000, you have 118,000 goes to the group retained profit. Total up altogether 160,000 for the group retained profit, and the NCI is 86,000. Therefore, you look at the statement of financial position. So you can see that here, goodwill, you have 0 goodwill. Alright, and then the inventories, you can see that you minus from the journal entry. Alright, journal entry, so you have here the journal entry where you credit that. Okay, so therefore you can see you add on the H plus S minus the U URP. Okay, based on the calculation of the URP before this, the 2000 here. Okay, alright, so URP for sale inventory is deducted in the inventories account, and the rest is the same. You simply total up everything, H plus S, without no adjustment. So H plus S, and of course this written profit and NCI is from the schedule. Okay, and then so here just give an example for you. If say the margin is on sales, based on margin, which is sales is 100%, therefore the calculation of the URP would be as such. Okay, so use this calculation. URP will be 5,000. The adjustment is still the same. Okay, the journal entry depends on who is the seller. Either is H or either is S is the seller. Alright, so that will be it on the adjustment for the sale of intra-group inventories and adjustment of unrealized profit.